What's up everybody? Nate here, and it's no secret that millions of people all throughout the world are financially worried right now. For one, we have markets tanking everywhere. The stock market in particular recently entered bear territory, and it might end up staying there by the end of 2022. Not only that, but we have the housing market finally starting to cool off in the United States as interest rates begin to rise and buyer demand essentially plummets. And finally, the pandemic and the war in Russia and Ukraine only seems to be escalating, with China essentially closing off its borders, further perpetuating the supply chain issues that are hurting the United States, but also the rest of the world. Understandably, many people around the world are worried about a recession. They're scared that we could see a recession, and I totally understand why. A recession could mean a lot less spending. A recession could mean unemployment, and a recession could mean that our GDP and our country basically shrinks economically as a lot of opportunities begin to end throughout not only the United States, but across the planet. That is extremely scary, but if I'm being completely honest with you, a recession, and more like a global recession, might actually be good for the entire world economy in general, and it might be what we need right now to kind of solve a lot of our world issues. So in today's video, we're going to talk about a recession. We're going to talk about what is causing the recession and why this potential recession might not be as bad as you might think, and why it might be just the thing that the United States and the rest of the world needs in order to solve a lot of our problems. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free, and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that, and now here is why a recession might actually be good for the entire planet. You see, we had some pretty serious issues with markets and assets and inflation in 2020 and in 2021. This created a lot of problems, and it expanded a lot of bubbles that were already growing in economies throughout the world. We started to see all markets everywhere hit new record highs. Everything essentially went up, from the products you buy on the shelves to the investments that you make on the New York Stock Exchange. And part of the reason for this is because of the Federal Reserve. Now, we have talked a lot about the Federal Reserve on this channel because the Federal Reserve essentially has one major function. They watch inflation in the United States. They kind of keep an eye on inflation, and they essentially cause it to go way up or way down. And over the last 2 years, they have made it go way up. And honestly, in 2020 and in 2021, that is exactly what the United States needed. We needed high inflation. We needed the Federal Reserve to print trillions of dollars in stimulus and trillions of dollars for Wall Street because everything was essentially failing, and we didn't know what was going to happen next with the pandemic. The unemployment rate hit almost 15% back in 2020, which means Americans weren't getting paychecks and businesses were not getting any money anyway. So we needed the Fed to print money, or else our entire economy was going to fail. I mean, think about our economy and the United States government for a second here. How does the United States government make money? How does anything make money? Well, they need money in order to make money. They need money in order to grow just about everything. The government is no different, but the only way the government can get money is if they raise taxes or if they print money. Of course, they can always add to their debt, but if they have no way of paying that off, then how exactly are they going to survive? This is exactly what happened in 2020. The United States federal government had trillions of dollars in debt, but they weren't getting any money in taxes, and they weren't getting money at all because nobody was spending any money. So that is a huge problem, and they can't just turn around and raise taxes because nobody has any money to begin with. So they went out and printed a bunch of money. This essentially pulled us out of a recession, the shortest recession in American history, because Americans were spending. They were spending, though, beyond fundamentals. In the United States, you need to have some sort of income in order to spend money. You have to have a job, you have to have investments, you have to have a trust fund. That money has to come from somewhere. Originally, the Federal Reserve has to print that money money, and that money eventually gets trickled down from businesses and banks and then all the way to the American consumer. Many Americans were now spending a whole bunch of money without actually working, which created a lot of supply chain issues and a lot of productivity issues because businesses were not really able to create all of the same things they could before because while they were getting a lot of money, nobody was really working. Fundamentally, the prices and the values for our entire economy was completely thrown off. The housing market started to hit new record highs and vastly outpaced incomes in the United States, which really doesn't make any sense because how do Americans afford and are able to buy a home? Well, they have a job or they have money that allows them to buy a home. Usually you can correlate the prices of homes by the amount that Americans make, but it didn't really make any sense to do that in 2020 and in 2021 because millions of Americans had that stimulus money. Not only that, many Americans had unemployment or they were using money from their investments. So fundamentally, the housing market continued to go up and up and up until now, housing prices are completely unaffordable for most Americans. Wages haven't really gone up to meet inflation. So everything in the United States now costs a whole lot more because the Federal Reserve printed a whole lot of money. And not only that, but the Federal Reserve dropped their benchmark interest rates to 0%. So all of the money that was in our economy before the Federal Reserve printed was now starting to be spent. Now, like I said though, this essentially pulled us out of a recession because around 70% of our GDP is measured in consumer spending. But with all of that money circulating and around 80% of all of the money being printed in 2020 and in 2021, this meant that there was way too much money circulating throughout our economy, and everything had no choice but to go up because when Americans get money, when investors get money, they go out and spend it. But investors spend their money on different things than the majority of Americans. Investors, when inflation is high and when money is printed, they go to assets. They go to something that they can own that's going to gather more value than what the inflation rate currently is. The reason for this is because as the Federal Reserve prints more money, the value of every single dollar starts to go down. But assets like stocks, bonds, and real estate actually start to go up because this is what people are putting their money into. People start to buy all of the things that investors really own at the end of the day. Americans buy products. They buy those products from businesses, which means the businesses have spikes in sale. Investors buy ownership of that company and then they build their wealth because that business is starting to do well. And when Americans get a whole bunch of money, they go out and buy homes and they buy cars. All of which are companies that investors can go out and own. So they protect themselves by investing in the stock market or real estate or commodities and recently cryptocurrency. So everything in our economy, including asset prices, hit an all-time record high. Housing prices hit a record high and also the stock market hit a new record high. But with around $20 trillion in circulation compared to around $3 trillion just before the pandemic began, the Federal Reserve is now starting to backtrack all of its monetary policies and is starting to eliminate demand in our economy. And what you're probably wondering is, well, how does that all affect the stock market? I mean, most of those monetary policies are going to affect everyday Americans, right? Well, the Federal Reserve's job is to keep an eye on inflation and keep it at a level that makes sense in the United States economy. Right now, they are doing everything they can to lower inflation because they believe our economy is in a really healthy position. That is going to cause a lot of stock market dilemmas though, because the stock market thrives on money coming into it. And if a lot of that money suddenly stops flowing in, then the stock market is going to go down. The Federal Reserve was printing hundreds of billions of dollars every single month in stimulus for Wall Street. They recently stopped that entire program, which means all of that money has suddenly disappeared. Investors now have to bet all of their own money, and that can be a bit risky when businesses have stopped making a lot of money. With the Federal Reserve raising interest rates, demand for loans for both businesses and Americans now goes way down because many Americans cannot afford to get a loan with interest rates getting way too high. Those loans are determined by how much you can afford every single month, and if your monthly payment is way too high and outpaces your income and your debt to to income ratio, then you're not going to be able to afford to take on any more debt. That means things like the housing market go down and the auto market go down, and businesses can no longer afford to take on their own debt either. That's part of the reason why the stock market is collapsing. Thousands of businesses can no longer afford to get any debt because the Federal Reserve is making it really hard to get any money. That completely stops the circulation because now nobody can get any new sources of money. Tech companies in particular hold a huge portion of the New York Stock Exchange. Many investors started to put billions, if not trillions of dollars into these companies that were basically unproven in 2020 and in 2021 through IPOs and just regular investments. Now they're pulling a lot of those investments because all of these companies are laying people off because they don't have any liquidity from the Federal Reserve, and also they're not making any money. So they are a really risky investment, especially if they have no sales. Many businesses are starting to struggle with that too, not just the tech sector. You're seeing businesses all throughout the United States show really bad earnings reports because they're not making as much profit or revenue that they did before, and they have additional costs because they have to pay people a whole lot more because inflation is so high and costs associated with the pandemic and additional supply chain issues. So investors are pulling their money out, which is trillions of dollars eliminated from the New York Stock Exchange, causing the bear market. And the Federal Reserve is tightening things even further, making it really hard for the average American to go out and spend as well. So with nobody spending any money, a recession is pretty likely in the United States. But a recession almost causes a reset for everything in our economy. The one thing you got to keep in mind about a recession is that all of a sudden everything in our economy starts to go down. This includes asset prices, this includes home prices, and it includes prices of everyday goods and services. When everything comes down, that creates an opportunity for everybody in the economy to grow their wealth if they know how to. Not only that, but a lot of these companies that have simply just been coasting for the last 2 years now have to do a whole lot better. See, this is one of the benefits to capitalism. When you have a recession, when you have problems in your economy, really only the strongest companies are going to survive. If Americans don't like your product, if Americans don't like your innovation or don't like your company as a whole and what it stands for, then they're not going to buy from you. Businesses are now starting to figure out, especially tech companies, that they need to really figure out strong money-making strategies in 2022. If they don't have that, if they don't continue to innovate and get better, well, then they're not going to get investor money and they're not going to get consumer money. Over the last 2 years, it was easy for just about any company to make billions of dollars and get millions, if not billions of dollars worth of investor interest. All you had to do was say you're a tech startup and billions of dollars would flow into you from investors. This is because they wanted to flip the stock or they wanted to make money, and some of them genuinely believe in that company, but at the end of the day, many of them were just trying to make a quick buck, pushing up a lot of interest in companies that wasn't really there before and really shouldn't have existed in the first place. A lot of the IPOs that launched in 2020 and in 2021 were severely overvalued because investors had a whole bunch of money to play with. It wasn't that the companies were super valuable or that they were doing something way better than other companies. They just simply existed and investors wanted to make money off of them. In 2022, the case is not that simple. Investors have to go off of things they can rely on, stable stocks and stable investments, and they can't trust a lot of these businesses anymore. So like I said, a stock market crash is going to cause a lot of these businesses that were only there getting investor money and don't have a proven business strategy to eventually fail. And the ones that do continue are going to be a lot better because of it. They're going to innovate. They're going to figure out ways to make money. They're going to become better companies overall because they have no other choice. Nobody is spending money right now. So how do you as a company get that consumer money? The companies that actually do this the right way are also going to get that liquidity from the New York Stock Exchange. They don't have to worry so much about taking on debt and the Federal Reserve's interest rates because they're already making enough money. Eventually, the Federal Reserve will lower their interest rates again. I don't know if that'll happen in 2022, 2023, or beyond, but eventually they will go back down, and that's the time time that a lot of these companies who already have a proven business strategy will suddenly start to grow a lot faster. But no more coasting. All of these companies are going to have to do a whole lot better if they want to survive in 2022, and that is a good thing for our economy as a whole. You don't want to have a bunch of bad investments out there, and a stock market crash is going to eliminate all of those bad investments. And the exact same thing can be said about a recession. This creates an opportunity for millions of Americans to start investing and buy a lot of stocks, bonds, and commodities that they couldn't get before because prices were way too high. As wages start to increase in the United States, which they definitely are, it's just been very slow, Americans will have a lot more money to put into the stock market or to buy a home. The recession that we're going to feel in 2022, if it actually happens, is not going to be a typical recession. It's simply going to be a lowering back to normal levels, which is exactly what our economy needs at this point. We have had historic spending, we have had historic money printing, and we have had historic values all hitting record highs in 2020 and in 2021. All of that needs to come back down, and as it does, it's going to create opportunities for the everyday American to grow their wealth if they know how to. But now I want to hear from you on this issue. What do you think about a recession actually being good for our economy in general? Do you think that things need to reset and kind of come back down from their record highs in order to get our economy back on track? Or do you think that things are only going to get worse and there are no opportunities essentially coming for everyday Americans anytime soon? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.